I'm Francine Lacqua in conversation with Paolo Gentiloni. He is the Commissioner for the Economy for the European Commission. Commissioner, thank you so much for joining us. Only last week, the European Commission actually changed their forecast, upgrading them for GDP for this year. Is this because of the Joint Recovery Fund money being dispersed in the summer, or is it more on the vaccination program accelerating in Europe?
Well, thank you. First of all, I would say both, because we have from one side, the vaccination campaign that is growing after initial delays now with good speed and with very strong coordination among member states in the European Union. And second, of course, that we factored in for the first time in this forecast the impact of Next Generation EU. And this is the reason why we estimate to have growth of 4.2 and 4.4% in this year and next year. And these are rather good figures, as you know, for the European economy, which is not an economy accustomed to very, very high level of growth. So a little bit of more optimism, but of course we still have a certain amount of uncertainty connected to variants of the virus and to the nature of the recovery. But all in all, more optimistic forecast, I would say.
I was going to ask you, Commissioner, whether any of your forecasts or what your forecast would be were there to be variants in COVID-19 that would lead to further lockdowns.
Well, we had, as you know, a very good third quarter last year. And indeed, we were last autumn thinking to have a better winter. This is sure. And then we had in the last quarter of 2020 and the first quarter of this year a 0 point something negative growth in the EU. But now, you know, also during these two quarters with 0 point something negative growth, we had part of our economy, especially manufacturing, but also a strong part of services already running. And now gradually the fact that restrictions are canceled is making all other sectors of the economy in the recovery. So we are quite optimistic on the fact that the second quarter and especially the second part of the year will be quite positive.
Commissioner, and of course these new variants, you know, coming from other places are extremely difficult to predict. But so given where we are now, how even will the recovery be amongst member states of the EU?
Well, the differences are there, of course. We have, and I think we should never forget that we have differences inside member states because the impact of this crisis was not an equal one. And differences among winners and losers of this pandemic are very clear in our countries. Second, we have differences among sectors. I was mentioning sectors that are running, like manufacture or constructions, for example, and others like travel, tourism, entertainment industries that are still, despite the easing of restriction, lagging behind. And then we have differences among member states in the Union because some member states had a less sharp recession in 2020. But I have to say that this Next Generation EU was exactly designed to reduce the risk of divergence among member states. As you know, it is not equally, this common debt is not equally distributed among member states. It is specifically targeted towards countries more affected by the pandemic and with higher economic difficulties. So it will help to manage and reduce this different speed of recovery. But we will have different speed in that case.
And a lot of these funds, of course, Commissioner, will go to the digital economy and to green projects. How can you be sure that this money is not squandered?
Well, we have, I think, a rather coherent strategy here in Brussels and in the European Commission. As you may remember, we launched this European Green Deal strategy just before the outbreak. It was December 2019, January 2020. And then, and this was not obvious, we were able to avoid to put on hold this strategy because of the pandemic. Exactly on the contrary, we decided in August, September last year to make it more ambitious, transforming our targets of reduction of emissions from 40% to 55% of reduction. And this honestly was a rather bold decision, because at the time we didn't have the changes that then came from countries like South Korea, South Africa, Japan, Canada, and especially in the US attitude towards the Paris Agreement and climate change. So I would say that we run some risk of having maybe a too advanced strategy, but now we have some advantages that are the advantages of the early mover.
Commissioner, how many plans have you received so far from member states? And are you pretty satisfied with how they look, or do you think there'll need to be revisions?
Well, we received until now 18 plans out of 27. And I think they are coming, the others in the coming weeks. We are quite satisfied of the fact that broadly these plans are coherent with the priorities that we decided. And this is very important because we need an added value for this common debt issued by the European Commission. And the added value is measured on two things. One, our priorities, so the climate change and the digital competitiveness, that were the two main issues at the core of our strategy. And second, to address some reforms that are needed to make our growth stronger and more sustainable in the future. All in all, I think that plans are broadly coherent with these goals, but of course the assessment of each single plan is ongoing, and it will last still 1 month, and I think in 1 month the Commission will begin to propose to the Council to approve these plans.
Are you worried, Commissioner, about a delay in ratification, so that some of the countries are struggling to get it approved by Parliament in time? And what does that mean for your timeline of dispersing the funds?
Well, I'm quite optimistic, but maybe I'm always optimistic, but you should, because we until now had ratification coming from 22 out of 27 member states. And of the 5 missing member states, we have already had the approval in the lower house, both in 2 of these 5 countries. And one of the more challenging approval decision was taken just yesterday in Finland, because Finland needed to have a two-thirds majority, and it was not an easy game politically. So I am quite confident that we will have the approval, absolutely, and I hope and I work to make possible to have this approval within the month of May. What is the difference? The difference is that if we have all the ratifications, so also the 5 missing ratification in the next 10, 12 days, we can go to financial markets in June. Otherwise, if ratification will spill over to June, we will go in financial market in July. This is not a huge difference, but of course, the sooner the better, because in this case, we could easily deliver on what we call here the pre-financing, which is the fact that when you approve the plan, you are disbursing 13% of the amount to member states. And this should happen before the summer pause, but of course easier if we go into financial markets also in June and not only in July.
Commissioner, one of the other things that we're seeing in the economy, or the uptick in the economy, is the fact that actually many companies struggle to find the right components or raw materials. Do you worry that this will actually lead to significant inflation, which I know is not in your forecast at the moment, but is this your main worry for the European economy?
Well, indeed, we are perfectly aware of this problem, and we work to try to have the right balance, because of course we have an economic model here in EU which is a very open one, open to competition, open to investment, and based on the search of level playing field with partners, etc., etc. We don't have a protectionist attitude with our economy. Of course, we assisted during this pandemic to the fact that some of the value chain could be threatened by the situation. You were mentioning raw materials, but we saw this also in pharmaceutical. And so maybe for the first time, the European Union is working hard to have a sound industrial policy, and not only an efficient, open to competition single market. But of course, having a good industrial policy will not mean that we will close our doors.
There's currently also suspension of the EU fiscal rules in order to deal with debt and the pandemic. How long do you see the suspension lasting for?
Well, the orientation that we have and that we will confirm in probably 10 days is that this suspension, what we call here the general escape clause in our fiscal rules, will remain in place also for next year. And this, I think, is strongly needed in a moment where supportive policies are still important in our economies. There is a lot of discussion here on the fact that other global players like China or US are giving much stronger support to their economy. Well, I'm not enthusiastic of comparison, because these are very different economies and systems. But all in all, what is clear is that we still need supportive fiscal policy. And for this reason, the general escape clause will remain in place also next year.
You've also said this week that actually it's time to rethink taxation in Europe, that you're proposing a new framework that would cut red tape, reduce compliance costs, but also minimize tax avoidance. When do you think we could have these new rules in place?
Yes, indeed. Yesterday we proposed what we call a business taxation strategy for the 21st century. So something, at least in its name, very, very ambitious. What is it about? I would say three things. One, supporting the effort that we are doing to reach an agreement at OECD level. Because the voice of the European Union should be very loud and clear on the fact that we have now finally a possible global agreement. And this would be a game changer for international taxation, for reallocation of taxing rights, for introducing a minimal taxation at a global level, etc. Second, we have a series of short-term measures. Just to give you an example, we will propose a directive about the so-called shell companies to reduce the use of these companies with no activity, to increase tax avoidance and in some cases also money laundering. And second, we will decide something to make public the effective taxation of large companies in the Silk market, which is very important. Then we have a midterm strategy, which is to reach a common framework for business taxation in the EU. And we will work to table a proposal in 2 years from now, honestly, with the hope to have behind us a global agreement, because of course, having a global agreement will help strongly this European common framework for business taxation.
But Commissioner, I mean, you could argue that actually it's been almost a decade that Europe has tried to, have efforts for a corporate tax which have been inconclusive. So why do you think this time is different?
Well, I think for two reasons. One is what I just said, that we could, and I think there is a good chance that this could become possible. We could base this on a global agreement. Of course, if there is a global agreement to have a partial reallocation of taxing rights in what in the OECD discussion we call the Pillar 1, and on the minimal taxation, and the Americans are pushing strongly in this direction. On this basis, to reach our unity in Europe will be much easier and, from my point of view, absolutely needed. But second, I think there is also another reason, and the other reason is the post-pandemic situation, because all Europeans know that we need stable and huge public resources to fund the recovery, and these resources need to be built also reducing the aggressive tax planning, the competition among member states to lower the tax bases, etc.
Do you think, Commissioner, then, I mean, if I'm understanding what you're saying correctly, maybe the U.S. proposal to have this minimum rate for companies was a real game changer, actually, in accelerating this movement?
Absolutely. If we look where we were in this conversation, well, this conversation is 6-7 years old in the OECD. But if we look where we were only 6 months ago, we were in a stalemate in this discussion. And the new proposals coming from Washington, they are not the solution in itself of the problem, but they are for sure a game changer that we strongly encourage.